My team works to provide you with options so that you can maximize your financial potential and enjoy your retirement. What we do is we help you balance your insurance policies, your retirement accounts, your investments, your income, and any loans that you may have out. We help you balance and handle the what ifs. There are a number of wealth building challenges, as you've already explained to me, some of those that you've experienced that make you vulnerable to wealth eroding factors. Sometimes they come in the form of just really honestly not having enough time to properly research and vet every single aspect of your financial decisions. The government is constantly changing the tax codes, and a lot of people find it challenging to keep up with those and figure out how that shapes their financial picture. The media, too, is constantly bombarding people with misinformation. That misinformation leads to them making poor financial decisions. Our goal is to help you have as much money as possible, to minimize your taxes, to reduce or just eliminate your debt, your risks, and to preserve the wealth that you have and preserve the wealth that we help build. The result is you're happier, you're more in control, you're proud of the financial decisions that you've made, your accomplishments. There are 5 ways that people make money decisions. The first one we're going to talk about is the one that we utilize here, which is a customized approach to problem solving. It focuses on efficiently and effectively building your wealth, and it helps you protect your wealth from those eroding factors that I was talking about, such as taxes, inflation, market fluctuations, claims from creditors, and other various what ifs. Our main objective is to build your wealth beyond what your predetermined needs or wants are. A second method is traditional financial planning. That's number crunching. It's just having a goal, having a number, and working to get there. And that is a limiting philosophy. That's a limiting method of financial planning. Another way of making money decisions is through needs planning, which is I'm trying to get my kid to college, I'm trying to pay off my house, I'm trying to pay for these estate taxes. That way of planning it's interesting to call it planning because it's more reactive than proactive. And I think planning is putting something in place before something happens. And at this point, you've already developed that need and you're just working to just try to get to this one place. Occasional planning is what a lot of people do, which I found is just when something kind of falls on their lap or they're out playing golf with their buddies and they're like, hey guy, I just got a new Roth IRA and maybe you should do it too. And they just kind of fly by the seat of their pants kind of planning. This usually keeps people one step behind where they should be or where they could be, which is counterproductive to as an understatement. The final money-making decision would be no planning at all, which, as you could imagine, is quite devastating. And I'm sure you know some people in your family or friends that are trying that fifth method. The lifetime economic acceleration process, that's what we utilize here. And the whole purpose of it is for us to optimize your velocity of your money. Basically, what that is it's just trying to keep your money in motion. So it's like you've got it in your right pocket, let's put it in your left. Let's take it out of your left pocket, let's put it somewhere else. I'm going to go into detail a little bit later, but basically It's just the philosophy that we've adopted from what a lot of financial institutions do with our cash. Also comparing how we operate here versus traditional financial planning. Um, I've said it before, what we try to do is maximize your potential rather than just meet those needs and meet those goals and say, hey, good job, I, we don't get there. We don't say mission accomplished. We say, what else can we do? This is a relationship. This is an ongoing relationship that I aim to have. So I'm constantly trying to see how I can maximize your potential. Also, constantly trying to see how I can minimize your taxes rather than just postponing them and pushing them over to whenever Uncle Sam says you gotta pay up. Another difference with us versus traditional planning is we aim to grow, enjoy, and conserve your estate. And that whole concept of you having an estate sounds strange right now, but that's what we're building, what we're growing together. Traditionally, the goal is just to conserve it, but we want you to literally be able to enjoy it while you're still here, and grow it, make it pop. So going back to that bank analogy that I mentioned, there are 4 basic rules that financial institutions utilize with making profit off of us. And they want us to give them our money. They want to keep getting it on an ongoing basis. They want to hold on to it for as long as possible. Then they want to give it back to us in as little bitty pieces as possible. They are huge proponents of compounding interest, getting term or group insurance, having low deductibles on insurance. They are huge proponents of mortgages that are less than 30 years and prepaying mortgages by accelerating your payments. These are things that may sound familiar to you that you've heard from some of these financial institutions. They do this because it's a winning financial strategy for them. We want to make sure that we've got going as efficiently and effectively as possible a winning financial strategy for you. So that means what we do here is we use a careful and strategic evaluation constantly of which strategies are proven to be effective and ineffective, which ones are going to work for you and which ones don't. Without a financial model, without a chessboard, you can't play the game. The game plays you. A lot of people, when they think about where their finances are, it is just in utter disarray. That's how it's described to me, or that's how it's in existence in their mind. We call that a financial junk drawer. If you are having that experience, or you know someone that has that experience where just everything is just uncoordinated, decisions are based on opinion, they're limited to what I was saying earlier. What are their needs for this moment? What are their goals for just right now? What just fell on their lap and they just purchased by convenience? That is what we describe as chaos. And unfortunately, there are a lot of people that are in that kind of chaotic purgatory. Our goal is to let you make strategic decisions using what we call the PS&G model, which is protection, savings, and growth. So with our protection component, our objectives are to reduce your risk, like I said before, protect your assets, maximize that coverage in protecting those assets, protect your income, which not a lot of people are thinking about, but that's our job, and minimize cost. And that's our protection model. That's protection component. That's step 1. Step 2 is get our savings together, which is improve your yields, minimize your taxes, and manage and reduce your risk. It's very simple. And step 3 is our growth component, which is, of course, what everybody is excited about, which is doing whatever we can do to increase your rate of return, provide tax benefits, and provide income. So as your financial advisor, I prefer to macro manage rather than micromanage. You can just think of me as a financial quarterback, right? You're in control, and I'm just helping you. So I'm right here on this little model in the corner. But in your world, you've got your property and casualty, you've got your home and your car insurance agent, you've got your life insurance agent, your real estate agent, you've got your attorney, your accountant, your banker. You have aligned yourself with all these micromanagers. What will help is the presence of a macro manager. And then we can coordinate all these micromanagers together, kind of like, for example, this would be, our model would be our sheet music, and the two of us would be conductors. And all of these various people and entities that are helping you manage everything kind of chaotically, we bring them together in concert. We let them read this sheet music, and we make everything work in synergy. And basically that's how our PS&G model works. That's the first step, is just getting everything plugged in, and the second step is getting everything to coordinate and work harmoniously. And the third step is to just make sure we're always being as efficient as possible. We're always promoting that velocity of money I was talking about earlier. The following objectives are established for each of our clients, which is, like I said, creating the maximum amount of wealth possible for you. I want you to enjoy that maximum amount while you're here on a guaranteed basis without any fear of it running out. And then I want you to be able to pass it on to whoever, to your family, to Uncle Sam if you want to your charities. We want to make sure 1, 2, and 3 happen under all circumstances. The cost of our services, I get paid in one of 3 ways. Through fees for any sort of transactions that may occur. I get commissions from some of the financial products, and we'll get into that later. But my favorite way of me getting paid is through referrals. My business, any business, cannot grow without quality referrals. So if you can, I need just one other person that's like you, that's probably got some sort of junk drawer situation going on and is looking to just gain some control and some freedom. And if you could just put me in contact with them, that would be greatly appreciated. You know, any little bit of clarity that they may receive about their financial future, to me, is worth a 45-minute conversation. So thank you very much for hearing our personal finance and wealth building spiel. Do you have any questions?